GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John, and Happy New Year.
Hey, Jim. Happy New Year to you, too.
Donald Trump holds his first news conference in a dog's age, and the reaction to it has been seen immediately on the markets. Let's start with the price of gold.
Yeah, gold popped, the U.S. dollar index went down, and the Mexican peso crashed, basically, as he spoke. So I think, the Trump presidency is going to be really consequential for markets, especially for traders, the short-term movements, based on what he says, because he says a lot. He crashed the pharmaceutical stocks briefly today by complaining about their pricing practices and saying he was going to fix it, which is to say that the U.S. government is going to start negotiating drug prices with the pharmaceutical companies to get lower prices. And we're one of the few countries that doesn't do that at the moment. Medicare and Medicaid in the U.S. aren't allowed to negotiate with the pharmaceutical companies for lower drug prices. So our prices are relatively high here. And the fact that the president is now promising to fix that caused the big pharma stocks to tank. So it's unusual for a president to move the markets like this, because usually they're more general in their speech patterns. Obama didn't come out and target specific companies over specific product prices. And so, a press conference in the current administration, because President Obama is still president, but it wasn't something that you had to pay attention to in terms of your stock portfolio. And Trump is going to be a different story, I think, because he's got very specific ideas that are very consequential for companies, and they seem to be in a lot of cases mutually exclusive and contradictory and everything. So it's hard for people to figure out what it is exactly that the U.S. policy is on a given subject. And I think a lot of people expected Trump to be kind of a statesman, to moderate his behavior once he was elected, but he's not. He's just who he is, tweeting at 3 o'clock in the morning and getting into fights with celebrities, with Meryl Streep just lately. She criticized him, then he tweeted about her at night, so there's this big Twitter storm over that. So this is really different, from a political standpoint, obviously, but also from an investing standpoint. And it's not clear where we go from here, whether coherent policies evolve out of the stuff that Donald Trump is saying, or if we're going to bounce back and forth in a lot of different directions. I think if the latter turns out to be true, that's probably good for gold and silver, though, because they tend to attract capital in times of uncertainty. And if we don't know for sure what U.S. policy is on a lot of different subjects, then that's uncertainty. So you would expect to see a lot of money flowing into that kind of a safe haven. And that's the way it's worked so far. Although I don't know if you can blame or credit Donald Trump for movements in the precious metals markets, because the Commitment of Traders report has been a really good indicator of short-term movements in the last decade or so, and it's been signaling an imminent bottom in precious metals. In other words, the speculators who were terrified at the beginning of 2016, which then led to a big jump in gold and silver prices, which got the speculators all excited and made them go extremely long by July of 2016, and then guaranteed a downtrend in gold and silver. And now they're starting to get conservative again, the speculators. You know, their long positions have been flushed out, and they're starting to look at going short because they're pessimistic, and that usually leads to an uptrend in gold and silver prices, and that's what we're seeing, you know. So I don't think necessarily the vagaries of U.S. public policy have all that much to do with gold and silver prices right now. So I think the internal structure of the market is probably why it's going up, but I think that Donald Trump saying things that breeds uncertainty in the markets can't be hurting.
Currencies, too, are reacting to Trump's statement. The Canadian dollar, at the moment that we're speaking, has hit 76 cents American. The pound and euro also went up, but the euro at $1.06 American. Will the euro ever reach parity with the U.S. dollar, or the U.S. dollar reach parity with the euro?
Yeah, I would think so. Because of the euro's problems. You know, they still have a series of elections coming up this year, any one of which can be Brexit-like in its impact. It could be the French election, where Marine Le Pen makes a stronger than expected showing, or the Italian election, where Beppe Grillo ends up in charge, you know, and stuff like that is completely possible. And it's a result of the fatal flaws of the original structure of the euro, and so it won't go away until they fix that, which means it's not going to go away for a while. So the uncertainty around the euro is likely to continue, which means there's a good chance that it has to be devalued aggressively in order to hold the eurozone together. So yeah, I wouldn't be optimistic about the value of the euro going forward, just because it's got so many flaws and so many problems. The Canadian dollar, on the other hand, you know, even at 76 cents to the U.S. dollar, that means visiting you guys is still a pretty good deal for us. So I think you're going to see a lot of American tourists going forward. So get ready, you know.
New York Times picked Canada as the #1 tourist destination of the year.
Yeah. I'm going to Banff in the summer. So keep your currency as low as possible until then, please, Jim.
Well, Canadian citizens get to go to Banff for free. You can get a free pass into any national park. You still have to register, though. You still have to go through the gates. But I don't think it counts for people coming from the U.S. It's cheap anyway.
No, we have to pay.
It's still cheap.
So you need a really low Canadian dollar to make my trip pleasant, okay? So do what you can.
Well, I remember interviewing a man from Chicago in Gastown who said, "I love visiting Vancouver. Your dollar is like a small rock. I can throw it a long way."
That's not always true, though, because sometimes in the last few years, the Canadian dollar versus U.S. dollar has really been a roller coaster. And when the Canadian dollar is extremely strong, because Vancouver's not a cheap place to visit to begin with.
No.
Right? And so when you add 30 or 40 or 50% onto the price of restaurants up there in the currency translation, then it's prohibitive. So that's not good for us. We like that cheap Canadian dollar so we can come up and eat well and stay in nice hotels.
Yes, and pack Whistler.
There you go.
Well, even BC,
great ski resorts.
I have to say, one wise thing the BC government did was have its Family Day a week before the rest of Canada, so that British Columbians could go and flood all the ski resorts in February, and then do it a week before the rest of Canada comes to flood all the ski resorts.
Oh yeah, that's better for everybody because well, you guys have BC Day there.
Yes,
too,
exactly.
Right? Which I made the mistake once of visiting Canada or visiting British Columbia on the BC Day weekend without bothering to make a hotel reservation because I assumed, Canada is not very populous. There will be plenty of hotel rooms, and we get up there, we ended up having to sleep in the car for a couple of days. So yeah, it's better to spread that stuff out. Of course, we're getting kind of far afield from finance here, but it's interesting, as somebody who lives near Canada, I care about what it's like to visit because we do that a lot.
Prime Minister Trudeau doesn't have any plans to go to the Trump inauguration. Is that a political mistake?
politics is just really hard to understand right now. So I think that President Donald Trump is going to be embroiled in controversies of one kind or another for his entire administration because that's his nature. So yeah, he's going to make people mad, and other people are going to respond to him in really aggressive ways, and he'll respond back, and that's just what's going to happen. And hopefully, it's only verbal. We can get through 4 years or 8 years of a lot of contentious words, but for it to evolve into something physical, that's a different story. And I hope we can avoid that, especially with Russia and China. Because those guys have always been looking for advantages, and we've always been trying to impose our will on them. And so we're always close to some kind of a conflict, which is just the nature of international relations. When you've got rising powers and status quo powers, there's always the potential for conflict. And so now we've got a new element thrown into that mix with Donald Trump being president. So that worries me. I hope we can keep it together and not end up with some kind of a, shooting war or proxy war or something like that really makes the next 8 years even more disturbing than they're going to be because of the financial crisis that's out there looming.
Right. The South China Sea thing, the fuss over the missing U.S. Navy underwater drone where China denied that they'd taken it, strongly denied it, vehemently denied it, and then the next day they returned it.
Yeah. Well, and obviously Russia in Europe, supposedly we're sending extra soldiers to the Europe-Russia border right now. And in the South China Sea, as you said, China is sending warships that are close enough to Taiwan to cause Taiwan to mobilize its forces. So the potential for conflict is always there, and there's always stuff like this going on. And you have to hope that we can keep it at the current level, where we're rattling sabers and we're jockeying for position, but we're not going out there and just trying to grab territory or anything by force. Because that's the history of the human race. We've been doing stuff like that since the beginning of time, and there has never been a time in human history when there weren't people more or less starting wars or prosecuting wars or preparing for war. That's just the nature of human history, and there's no reason for it to change going forward. But with the power of weapons today and the fact that we're so financially fragile because we've borrowed absolutely insane amounts of money and maybe can't handle, from a financial standpoint, an actual conflict that involves more than one superpower. There's the potential for a lot of trouble where politics feeds into finance, which feeds into some kind of military conflict, and so on, in a self-reinforcing cycle that leads to a really horrific few years. Because even if everybody was getting along and there were no chances whatsoever anywhere in the world of a flare-up that turns into some kind of a military conflict, we would still have a gigantic financial crisis looming because we've borrowed vastly more money than we can ever hope to pay off, and we're continuing to do so. The U.S. added about $1.2 trillion of government debt in the last year. In the 7th year of an expansion which is normally a time when you've got most of the people back to work and tax revenues are flowing in and government finances are pretty good. They don't have to borrow much. But this time around, 7th year in, we borrow pretty close to as much as we've ever borrowed in 1 year at the level of the federal government. And corporations borrowed a record amount of money around the world. China took on a huge amount of money. Europe, as always, borrowed incredible amounts of money that they already can't pay off, and they're adding to it. So we're making our financial situation much, much worse going forward. And there's no way to avoid a huge crisis out there because of this. So we can hope that the crisis is only a financial crisis, and it doesn't bring with it some kind of geopolitical thing, which unfortunately tends to be the way it works. If you've got a mess in your domestic financial system because of your own mismanagement, and you're the leader of the country, it's natural and normal and historically common to look abroad for an enemy to distract your people from your own mismanagement. So we've got that going for us too right now, where everybody knows they've screwed up their countries. Japan, China, the U.S., Europe, we've all made a huge mess of things, and we're all paying a political price for it, or our leaders are paying a political price for it. So it's not surprising that the rhetoric is heating up as we look for enemies out there. The whole Putin thing, I think, is a good example of this, because he's not an immediate threat to the U.S. in any way, or even to Europe, really. I mean, Russia has never invaded Europe. It's not part of their history to do that. They mostly want to protect their own borders because they're the ones being invaded. If you look back through Russian history, it's almost always Napoleon or Hitler or somebody going over there, not Stalin, trying to take over Europe. And when they do grab territory, they think of it as a buffer, I think. So we don't really have to worry about Russia expanding in a really aggressive way, but we're behaving as if we do. And China has historically not, occupied Japan or anything. They fight a lot at their borders, and they always have. But we also shouldn't be worrying about them trying to build a gigantic empire where they take over Africa or something like that. It's just, it isn't something that's likely. And yet we're butting heads with them in Asia at the same time. And I think part of it is that they and we both feel the need for an external enemy. And so we're kind of accommodating each other right now as a way of distracting our voters, to the extent that there are voters.
The Falklands War in the 80s was the primary example of that. Argentina had a huge financial crisis, so of course invade the Falklands, get into a war with England that they thought they would win. Unfortunately, I think they forgot British history. Britain gave them all kinds of time to withdraw, but the Brits, if you're going to get into a conflict with them, they ran into a guy named Hitler once, and they're still a Britain.
Yeah. And the Falklands was a really good example of that. And it doesn't work out well very often when you do something like that, because if you've already got a financial mess at home, you can't handle a war. You add that level of expense and stress onto a country that's already financially stressed, and you frequently end up with regime change. So it just makes things worse. So,
well, how can you afford to lose weapons that are the GDP of small countries?
Yeah.
I mean, one B-2 bomber over $1 billion, right?
Yeah. And that's absolutely right. Or just feed an army. That's incredibly expensive. And maybe you choose to do something like that because you're looking just at this year. You're looking at the next election, and you want people behind you for the next election. And then you figure whatever happens after that, you'll make it work out. You don't frequently make it work out. It ends up being this gigantic mess that spins out of control. And this idea that our leaders are able to control events because they're the smartest people in the room is really dangerous. Every time we bring in brilliant people and turn them loose, they end up screwing things up, because a modern economy or a modern geopolitical conflict is vastly more complex than the human brain. There's no way one person or one group of guys sitting around a conference table can manage something that complex. And the idea that they can is just this illusion that gets you in trouble, which is why market-based systems work so much better than command and control systems, because markets are basically just agglomerations of millions of people doing what they think is right for themselves, making decisions with their own money that in the aggregate tend to work out. And the reason that they tend to work out in the aggregate is that there's nobody trying to figure out the whole thing and direct it. Everybody's making decisions based on stuff they more or less understand, their own situation. And so markets tend to be more efficient, more flexible, and more resilient than dictatorships. So to the extent that we're drifting towards dictatorship politically in the developed world, as we, for instance, put central banks in charge of our asset markets and increase the size of government and increase regulations, et cetera, and of course increase the surveillance state and the police state in general. As we do all that, we end up with more decision making at the top by people who flat out don't understand what they're doing, and less decision making from the bottom in the form of markets, so that we're drifting towards paralysis anyhow. It's a terrible situation that we're in, Jim. God, any angle you choose to look at our world, almost any angle, it's dark and disturbing. I think almost the only thing that you can look at and say, hey, this is great, is some aspects of technology. For instance, solar power is getting cheaper at an accelerating rate and is beginning to flat out push oil and gas and coal off the playing field. Most of the new power generating capacity that's coming online in the world right now is solar and wind, because they're that much cheaper than they used to be, and that's a really good thing. And it's also something that that doesn't require government intervention at this point. Once it's cheaper, even up with fossil fuels, then solar power is just going to, it's going to be like cars or computers or something like that, something whose time has come and will just spread around the world.
We'll have more with John Rubino right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Rubino. John, you're working on a magazine article about all these central banks snapping up equities. The Bank of Japan, the way they're going to own more than half of the 50 major companies in Japan. Are other countries seeing their central banks get into the equity market?
Well, there's a lot of pressure on the U.S. and the European Central Bank to start doing stuff like that. Right now, Japan, Switzerland, and Hong Kong have central banks that buy and sell equities. They are in a sense like hedge funds, where they go in and they buy a lot of stocks. And in Hong Kong's case, they sell a lot too, but the other two are just buying without selling. And so there's a lot of chatter right now about, including from the chairman of the Fed, Janet Yellen, has gone on record a few times in the last year saying, wouldn't it be nice if we could buy a broader selection of equities, or a broader selection of assets, including equities? So it looks like in the next recession, what will happen is the ECB and the Fed will start buying bonds again really aggressively, to the extent that they're not now. And they'll run out of bonds to buy. They'll push interest rates down via their bond buying to levels that can't go much further, because you get that zero bound there, which prevents interest rates from becoming too negative, or people just pull all their money out of their banks and just hold cash. So they'll run out of bonds that they can buy, and they'll run out of the ability to lower interest rates. And at that point, they'll change their rules to allow them to start buying equities. So that's a 2018 story probably. And when that happens, that introduces all kinds of new variables to the financial markets. Because if you got this gigantic buyer in there snapping up equities, do equities become risk-free? Because if the Fed is always going to stand ready to buy stocks if they start to fall, then you can buy them without regard to the valuation of the stock that you're buying or the success of the company that you're investing in. The old things you used to have to do to to increase the odds that you would invest successfully in equities go out the window because you got this gigantic buyer that has an unlimited printing press that just creates currency and buys more stocks. And when that starts happening, does that become sort of backdoor nationalization? Does the government that owns huge amounts of equities then get to tell those companies what to do because they're big shareholders? Can they tell General Motors, oh, you have to create a new plant in this congressman's district because we need his support on this other issue here, stuff like that, which would hamstring the market price signaling mechanism even more so than it is now. So I don't know. I think this is another really interesting thing that's happening that most people wouldn't have expected to happen, and yet here it comes. So, yeah, Jim, crazy stuff.
Well, that's what keeps us in business.
Yeah, we'll always have something to talk about on the gloom and doomy side of this story.
And if it gets really bright and positive, that'll be great to talk about.
That will be. I'm looking forward to the day when we can sit down and talk about the good things that are happening in the world and how that translates into the investments that we want to buy in growth stocks and things like that.
Everybody gets a free self-driving car.
There you go.
We'll all have to be on the Oprah show. A brand new car! Thank you so much, John.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. If you have any questions for us, you can email us at info@howstreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.